The Nifty itself is down about 20 points. So we're starting with a negative bias.
35-point kind of slip from the highs for the Nifty. There you have it. So we've moved back into the red as well.
For the markets, 30 points lower on the Nifty. We did see a sharper fall from the highs, and we have recovered a lot from those levels as well.
I guess somewhere the bulls have realized that this is not going to be a free, easy lunch, an easy ride to the end of the year.
Let me just quickly wrap up things. So we will end at 18,772, which is down about 82 odd points. And I think, the big turn happened. Actually, there were two big turns.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Stock markets wobble across the world after US Fed Chair Jerome Powell hints at more rate hikes. Sensex drops over 350 points. Nifty loses over 80 points. Midcap index snaps a 8-day gaining streak. Lupine's Nilesh Gupta expects sales worth $200 million from the new respiratory drug approved by the US FDA. Project sales in US to hit $850 million by FY25. Also adds that Lupine is doubling down on the Indian market as well. That's an exclusive. Zee Enterprises MD and CEO Puneet Goenka in interviews to papers says the merger with Sony can go through without him at the helm, and that both parties remain committed to the deal even while taking cognizance of SEBI's order. The TCS stock slips despite the IT services major inking a €840 million 10-year deal, while the launch of an enterprise generative AI platform by LTIMindtree fails to excite the stock. Powell's pointing to more rate hikes play spoiler. General Electric signs an MOU with Hindustan Aeronautics to produce fighter jet engines, marking a major milestone in the defense relationship. GE says it could potentially manufacture the engines in India once it gets the authorization from the US government. Here's the lineup, what we have in store for you. It's a packed show today. In Market Opinion, we have Harsha Upadhyay of Kotak Mutual Fund. In Big Corporate Voices, we have Nilesh Gupta, who's the Managing Director of Lupine. And to the first headline now, Sensex lost over 350 points and Nifty slipped over 80 points as stocks tumbled across the world. US Federal Reserve Chairman Jerome Powell hinted at further rate hikes as he testified before US lawmakers. This has rattled markets across the world. The Nifty Midcap Index also snapped an 8-day gaining streak. Prashant Nair is here with the market wrap. Prashant.
Well, it looked weak and tentative right from the word go, and by close, we were pretty much at the day's lowest point. It happened in waves. I mean, the market was okay till about 10:30 in the morning. That was the high point of the day, by the way. From there was a collapse all the way till about 1 p.m. From 1 p.m., the market rallied for an hour till about 2. And starting 2 o'clock, the market took another leg lower all the way to close at about close at 3:30. As I said, not at the day's low, but not very far away either. The changes on your screen, it's about 0.5%. But, I mean, the market has been closing higher, not lower. And that's the reason why even these 0.5% changes stand out. Bank Nifty did a little better, but down as well, about 1/3% there. The real deal was mid-caps and small caps. After a long time, these indices were lower in a pronounced way. 0.75%, 1% cuts on your screen. I'll get to stocks there in just a bit, but Nifty stocks first. Tata Steel, Bajaj Finance, Tata Consumer, Asian Paints, Tata Motors were some of the stocks which were under pressure. Advanced decline was 2:1 in favor of declines. This is, a reverse of what we're used to, but IDFC first, India Cements, Mahindra Financial, AB Capital, Kalyan Jewelers, Data Patterns, EIL were some of the other losers. Volume-led gainers, there was no dearth. And HCC, highest ever traded volumes, big gainer, 16%. Max Financial Services, that was underperforming in the life insurance space, that came up. BSC, KEI Industries, Aether, APL Apollo. You had neo names like Paradeep Phosphates, Dhampur Sugar, Dish TV, Supreme Industries continues to gain. Anthony Waste came out of the blue. Dalmia Bharat and Kim's. I go through this extensive list just to give you a sense of the kind of action which still prevails in the broader mid-cap and small cap universe. We will hear in global markets out of the US once again from Fed Chair. Yesterday, he did not really say very much new, but I think markets will be glued to that. The 20-day moving average for the Nifty stands at about 18,650, which is about 100 points lower, and that's the lower end. Will global markets continue to correct, and will we see some consolidation downwards? That's the question as we come back tomorrow.
Oh yes, it does remain a question. Thank you, Prashant, for that. In market opinion, Harsha Upadhyay of Kotak Mutual Fund says that broader markets have outperformed benchmarks in the beginning of a bull market. He's also bullish on defense stocks. Listen into what he had to say.
Sure. At the beginning of a bull market, you will see a lot of these liquidity-driven movements in the market. And that's what we are seeing right now. As usual, whenever the markets go up, and especially in a momentum-driven market, you will also see a lot of stocks which are not fundamentally strong also go up, and they do go up much more than some of the fundamentally strong stocks. So to that extent, in that basket, one needs to be careful. Defense is one pocket where we are also very positive from a long-term perspective. We do hold a couple of stocks in our portfolio. But from a very short-term perspective, I think most of these stocks are discounting at least the immediate upside that you can see in terms of fundamentals. What has happened is you do not have too many stocks which are into defense manufacturing at this point of time. And we have also seen a fundraise happening, and money has been raised for a thematic sector fund or a defense-related fund.
Okay, let's move on to the second headline now. Day after receiving US regulators' approval for its respiratory drug G Spiriva, Lupine Managing Director Nilesh Gupta told CNBC-TV18 exclusively that they are hoping to launch the medicine by next quarter. Lupine is the first generic drug company to receive US FDA's nod for the drug. Gupta said they were eyeing a quarterly sales of around $2 million in the US markets. Actually, that's not quarterly, that's the early sales that they expect from this drug at peak levels. Listen in.
We're at around 180 odd million at this point of time, right? And we'll launch it the next quarter. I think obviously it gets back to north of that 200 million. You know, I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved.
$850 million in terms of US generic sales by FY25.
Yeah, I think that's a pretty fair number. That's a pretty fair number. We should be able to do that and maybe some more. You've seen a lot of approvals from injectables, clearly more to be done there. India, obviously we're doubling down. We added 1,000 people. We're going to keep adding and we're going to keep growing in India, and then definitely restart innovation at some point.
Okay, those are that is an exclusive conversation, of course, but Ekta is joining us with more details on this drug and how it has been long awaited as an approval for Lupine. Ekta.
It's a long-awaited development for Lupine. The company has received the final US FDA nod for the generic version of the $1 billion respiratory drug by Boehringer Ingelheim, Spiriva. The inhaler is used to manage conditions such as bronchospasms associated with lung conditions such as chronic obstructive pulmonary disease. One of the key reasons for the upside in the stock is because there was uncertainty in the launch, which arose from the delay in approvals due to queries from the US drug regulator a year ago. The management by Q4 of FY23 was, however, confident of launching the drug. They had indicated that they could hear from the drug regulator by June or July if an inspection was not required, and by August if it was. One of the big clues for a possible US approval was the company receiving an approval in Canada just at the end of May, sometimes a precursor to a nod for the US. Now, one of the key positives is that this is an earlier than expected approval. The street had penciled in an approval by the second half of FY24, with some even skeptical of that timeline. The other positive is that it is expected to be a limited competition drug for at least the next 3 years. The street is currently penciling in around a 3-player market, including Lupine. So how much can Lupine make? The net sales of the handy hailer is around $500 to $700 million. Assuming around 35 to 50% price erosion, the dynamics of which can change based on how Boehringer Ingelheim reacts, the street is estimating the company can make $35 to $50 million in FY24 and can ramp up to sales of around $80 to $130 million by FY25. The street is even assuming peak sales of up to $140 million. All this is likely to translate into an EPS addition of around 3 to 5 rupees in FY24 and around 10 to 11 rupees by FY25. The larger picture for Lupine is a recovery from the US sales from which it gets around 32% of its total sales, and has been plagued by factors such as price pressure in FY23. With Spiriva generic in the near term, the US sales should scale up to at least around $200 million of quarterly sales from the US, pushing the US generic sales to over $850 million by FY25 versus the $632 million recorded in FY23. The street believes a lot of the good news from Spiriva generic is factored into the stock. The stock itself has rallied around 45% from lows it hit in August of last year. It is trading at valuations of around 35 to 39 times FY24 PE and 20 to 23 times FY25 PE around historical peaks. The next trigger for the street will be the sustainability in the US sales, approval of key drugs, as well as an overall recovery in the margins of the company.
Ekta, thank you so much for all those details. To the third headline now, Zee Entertainment CEO Puneet Goenka has said that the Zee Sony merger should go through whether he remains the CEO or not. In an interview with Mint, Goenka said that he's completely focused on the merger as it is of utmost importance to him. Surbhi Sitaria joins us with more details on this one. Surbhi, what are you picking up?
That's right. So Puneet Goenka in an interview to Mint has said that the merger is of utmost importance to him and the merger should go through irrespective of whether he is or not he's not the CEO of the company. He also said the merger will benefit 96% of the shareholders and therefore it is in the larger interest of the ecosystem for the merger to go through. Now that statement coupled with the Sony statement that came in yesterday that they are committed to the merger and are keeping an eye on the developments from the SEBI order, all of these are some positive triggers for the merger and that is why you were seeing Zee reacting positively to this news.
Okay, all right. Zee Entertainment did come off from the highs of the day considering the market scenario that we are in. Moving on, block deals are in focus in June 2023. Deals worth $2 billion were made across sectors this month. Vivek is joining us with more details on this one. Vivek, it's all about block deals in June.
Well, you're absolutely right. It's raining blocks as far as Dalal Street is concerned. And like you mentioned, the total value of all of the block deals has gone ahead and crossed almost $2 billion. In fact, today too, you saw very large block deals happen. Yesterday, you saw Shriram Financial over 4,800 crore. So, both Piramal as well as TPG Capital has exited. Today, Sansera, 14% of equity changed hands. Delivery, a clean-out trade from a PE investor. Carlyle exiting completely. So, in the last couple of days itself, so much of activity. But, just going back, in the last week or so as well, look at HDFC AMC, a 10% stake worth over 4,000 crore, absorbed quite easily. Timken India, the parent, selling a significant chunk, over 1,900 crore in that particular name. Look at Kim's Hospital as well, the PE investor sold stake over 680 crore. Kalyan Jewellers, you saw the stock rally quite a bit after the large block that happened. The PE sold stake worth almost 700 crore. Kotak Mahindra Bank, the CPPIB stake that was pending for quite some time, worth of that particular block deal was almost 5,800 crore. CMS Info, PE investor selling stake over 700 crore. Go Fashion over almost over 740 crore of block deal happening over there. MTAR Tech as well as CDSL. In CDSL, BSE sold almost 5% stake out of its total 20%. All of this was absorbed quite easily, and a lot of PE funds are getting exits, while the blocks are happening and while markets are within kissing distance of the lifetime high.
Okay, all right. Thank you, Vivek, for joining us and getting us up to speed with all the block deals in the month of June. Time for a break now. Stay tuned. We'll be back in a bit with the other headlines. Okay, to the second headline now. A day after receiving US regulators' approval for its respiratory drug G-Spiriva, Lupine Managing Director Nilesh Gupta told CNBC-TV18 exclusively that they are hoping to launch the medicine by next quarter. Lupine is the first generic drug company to receive US FDA's nod for the drug. Gupta said they are eyeing a quarterly sales of $200 million in America. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's go to the rest of the headlines that we are tracking for you. The fourth headline now. IT stocks were under pressure. That index fell over 0.5%. TCS slipped despite inking a big deal from UK's National Pension Trust, while the launch of an enterprise generative AI platform by LTIMindtree fails to excite the stock. Mangla Malu is here with the details of these deals. Mangla?
Yep, the IT space has indeed been a buzz with a lot of news, unfortunately with not much gains in terms of stock prices to show for. But in their defense, we have seen a bit of a rally in the IT stocks from the start of this week already. So which is why maybe TCS saw some profit taking, and that's after it announced a deal with Nest. It's a 10-year deal as of now with value potential of almost 840 million pounds. However, if this deal is extended to its entirety over 18 years, the value could extend all the way up to 1.5 billion pounds as well. So as a result of which, we saw TCS, which was in focus today. The other stock that I'm watching out for is LTIMindtree. Now, we're in that phase of technology where, if there is something which is trending, all companies will ensure that they have a product catering to that need itself. And this time, it's generative AI that we're talking about. So they have created a product for generative AI, and as a result of which the stock was in focus. Remember, while these tools will help their enterprises jumpstart growth and optimize their resources as well, the important question is how much in terms of revenue can it generate for LTIMindtree as well. For an overall productivity perspective, generative AI could actually increase the global GDP by about 7% in the next few years, and artificial intelligence itself could be an opportunity as large as $1.6 trillion by 2030. The question is how much accrues to companies which are starting with generative AI programs right now itself, and as a result of which we saw a bit of a decline in that counter as well.
Okay, all right. Thank you so much, Mangalam, for joining in. Moving on to the fifth headline now. Hindustan Aeronautics has signed a deal with GE Aerospace to co-produce fighter jet engines. The MOU includes joint production of GE Aerospace's F414 engines in India. In a statement, GE has said that they could potentially manufacture the engines in India once it receives export authorization from the US government. Parikshit Tutra joins us with more details on this one. Parikshit, it is a landmark deal for the Indian defense sector.
Well, yes, this has been blessed by the highest political levels by Prime Minister Modi and President Biden. This had been in the works for some time and it was supposed to be announced during this state visit. So what happens now? This will now need export authorization from the US government, from the US Congress as well. The US government is quite confident that they will be able to get this through Congress very, very soon. And post that, the technology transfer will begin in phases. We are learning that 80% technology transfer by value will happen to India over a 3-year period. And the engine production plant could possibly come up in Koraput, Odisha, which is one of the locations that HAL has in India for its engine unit. The payment for this technology transfer, we believe, could be one time. And the payment and the terms of payment, the phase-wise manner in which it's going to take place, all that's going to be worked out now. We're getting at least 11 or 12 critical technologies of this jet engine. This includes special coating for corrosion and erosion, repair technology for turbines, compression disc and blades, coating and machining of single crystal turbine blades, machining and coating of hot end parts, complete tech transfer for blisk machining, machining of powder, metallurgy, polymer matrix composite, laser drilling for combustion, bottle boring of shafts as well. A total of 99 aircraft engines will be built as part of this deal. Let's see how things pan out and how soon this gets congressional approval as well.
Okay, that's a landmark deal. Thank you so much, Parikshit, for bringing us all those details. Moving on, insurance stocks, they rallied in trade. HDFC Life, ICICI Prudential Life and Max Financials, they've gained anywhere between 12 to 18% since last Friday. Yash Jain is joining us here with all those details. Yash, what's working for these stocks?
Well, interestingly, Sonal, on June 28th is when the world celebrates International Insurance Awareness Day. But looks like the life insurance companies in India are already having a blast. Look at the move which some of these companies have had. For HDFC Life, since last Friday, it's moved about 15%. ICICI Prudential about 12%. Max Financial was a late gainer. In the last 3 trading sessions, moved majority of it. But 18% gain altogether. SBI Life 5%. LIC also about 8%. Now, with this up move that has come in life insurance stocks, they're very close. Some of them even crossed their 52 weeks high. HDFC Life particularly has made 52-week high for the past 3 days. SBI Life is just about 2.5% away. iPru Life about 5% away. Max Financial 10%. LIC about 13%. Now, what's worked for them is essentially FY24 as a year was expected to be a weak year, primarily because of a very strong base as well as impact of taxation coming on the sale of long-term savings policies in FY24. But the commentary which came from HDFC Life management to CNBC-TV18 was very strong. VNB growth in mid-teens, APE growth in mid-teens, margins anywhere between 28 to 30%. That sort of set the stocks on fire, so to say, as far as the life insurance sector is concerned. Different companies also have different triggers. For ICICI Prudential Life, there's a new MD and CEO who's taken over very recently. So, of course, the focus could be on growing premium very strongly, and that could be one trigger. Max Financial, there's some sort of catch-up trade which is going on as far as that company is concerned. Also, there are talks about Analjeet Singh selling his stake and execution of the Axis Max deal. So those are the two triggers. LIC non-deal roadshows are going on in Hong Kong and UK. So many triggers, but the important trigger being that strong growth of expected for the industry in FY24 versus the expectation of a weak year.
Okay, all right. Thank you so much, Yash. So those are some insurance stocks in focus. Let's take a look at some brokerage views now. JSW Energy gained nearly 1% today after brokerage firm Antique Stock Broking double upgraded the stock to a buy. Vivek joins us with more details. Vivek, what is the brokerage firm saying?
Well, that's right. It's some positive flow for JSW Energy, given the fact that, there's been a double upgrade. So, it's double the conviction from Antique as far as JSW Energy is concerned. What they are saying is that the company is well on its way to commissioning almost 10 gigawatts by FY25, which is half of its stated target or half of its stated FY30 target. Also, what they're saying is that this particular development of commissioning close to 10 gigawatts by FY25 will help the company garner almost 7,500 to 8,000 crore in EBITDA. And the company, along with that, is making rapid strides as far as energy storage is concerned, both from battery, from pumped hydro storage. Company is also making rapid strides in the green hydrogen segment. Now, earlier ROE for the company was depressed given the fact that the group believed in lower capital allocation and faster debt reduction. But, Antique now believes that that can change as well. They believe that, the recent acquisition that JSW did of Mitra, is improving efficiencies on a rapid scale. And what they're saying is that the run rate EBITDA for Mitra is well on its way to reaching 1,650 crore. And these, actually make the acquisition valuations much more comfortable at this point of time. They believe, the valuations are now at 6.4 times 1 year forward EV to EBITDA. And when you're comparing it to a greenfield project, it takes almost 7 times EV to EBITDA. So it's actually been a cheaper acquisition for JSW Energy. And lastly, what they're saying is that green hydrogen as well as solar module manufacturing is going to act as a sweetener as far as the company's prospects are going forward.
All right, that is JSW Energy. Moving on, IDFC Bank declined over 5% after CLSA downgraded the stock to an underperformed rating. However, the brokerage firm added that it likes the bank's growth story. Abhishek is here to tell us more. Abhishek.
Well, as you mentioned, CLSA has downgraded the rating on IDFC First Bank to underperformance from buy. However, they have increased the target price to about rupees 85 per share from the earlier target price of rupees 80 per share. Now, IDFC Bank, has been one of the best performing stock. That is what CLSA says, given the fact that YTD it's outperformed Bank Nifty by about 35% in last 6 months. So, while they like the bank's compelling loan growth story, however, they think that the valuation of 1.8 times price to book value on a 1 year forward basis does not fully reflect the unfinished journey on the ROE improvement. So they believe that the ROE can touch 14% by FY26 versus the 11% that the bank has seen in Q4 of FY23. So a mismatch between higher valuation and lower ROE has made them actually downgrade the stock to underperformance from buy. Back to you.
Take that point. All right, that's about IDFC First Bank. With that, it's a wrap on this edition of Markets Today. Thank you for watching.